Hello and good morning, everyone. Welcome to another episode of the Market Snapshot series. My name is Rufus Kamau, Markets Analyst at FXPesa. So today we'll be talking about the top highlight events that are expected to be moving markets today. Of course, on the economic calendar, we have the Bank of England, which will be making an interest rate decision, though largely we are expecting them to hold interest rates steady. Also, we'll be having the European Central Bank making an interest rate decision. Also, for the ECB, we expect them to hold interest rates steady. But then there was one peculiar news this morning, and it was not fundamental. It was an observation on what was happening in the markets technically. And that was mainly from the performance of both gold and silver, where silver managed to drop by around 18% within a very short period of time, around 2 hours of trading, and gold was down by over 6%. So clearly, we know that that has a lot of impact on the charts. And if you are affected negatively, then take note that we are living in very volatile times, so we might need to change tactic a bit, especially considering the extreme volatility we have been seeing in precious metals. So as always, remember that this session does not constitute of any form of investment advice. It's not a recommendation to trade, so you should always do your own due diligence. So once you join in, kindly say hi in the live comment section, and this will confirm that everything is working just fine. Yes, I agree with you, Kiama Muturi. Good morning. And this has been a rough first week of the month. It was only last week when we saw silver dropping by 40%. So a further 18% today was not necessary. They didn't have to do it. Same case as gold dropping by over 20% last week. And then another 6% this morning. They didn't have to do it. So good morning, Limo KV. Can see Robert covering the house. Lucy, Chinagram FX. Thank you for joining. Can see Knight 88 is in the house. Lina Mohonja is in the house. So just a sec as I share the live with other participants. Perfect. I think now we can proceed. So as you can see from the Finviz website, this is the performance of currencies as of this morning. So the Swiss franc and the US dollar and the euro seem to be the strongest currencies since the day started. Euro hasn't changed against the USD. Swiss franc, very little change against the USD. Whereas the weakest currency in the markets as of this morning has been the Japanese yen, which is down 0.18%. So this is not a huge movement, but also it's considerably the only weakest currency compared to the US dollar. So with the expectation of interest rate decisions from the ECB and the Bank of England, so we should be expecting more volatility in these currency pairs later today. So as for the week, today being Thursday, you'll notice that the JPY has been the weakest currency, down 1.49% to the dollar. The Australian dollar, which had a very interesting interest rate decision where they hiked interest rates, is the only winner, only gainer against the USD, up 0.39%, whereas the rest of the currencies have been losing to the US dollar. So year to date, that is since the year started, the Australian dollar and New Zealand dollar still remain the kings of the currencies. Both are 4.73% and 4.21% in that order. Swiss franc is also making some big moves. It's up 2.05% against the USD, whereas the weakest currency has been the JPY, which is down 0.15% against the USD. Also, it's important to note that the USD has also been very weak in the markets. So other than that, now looking at the economic calendar and focusing on the specifics. One, ADP non-farm employment change came in weaker than expected. The US economy created 22,000 jobs in December. This was against an expected 46K jobs, and the prior reading was 37K jobs, which was revised lower from 41K. So this shows signs that the job market could be weakening, and this is very concerning to the Fed. So we'll be also observing the official non-farm payrolls once they come out next month. Mainly because for this month, the BLS, the Bureau of Labor Statistics in the US, said they will not be able to print out the report in time, basically because the US government was on a shutdown. So when the US government is on a shutdown, the BLS employees are usually sent home, so they were not able to generate the report. So ISM services PMI came in at 53.8, beating 53.5 expectations, but also a slight slowdown from 54.4 in the prior reading. So there was a big draw in crude oil inventories in the US of 3.5 million barrels. So when you see oil stocks basically reducing, then that creates scarcity. So in this case, you tend to see price moving higher. So other than that, today at 3 p.m., this is when we expect the big decision by the Bank of England participants. So we expect a majority vote of 7-0, where 7 members are expected to be voting for holding interest rates steady at 3.75%, and 2 members voting for a rate cut. And if you compare with the prior reading, it was 5 members who basically voted for holding, if I'm not wrong, and 4 members when this was a rate cut, if I'm not wrong. Let's see. Yeah, so in the prior reading, it was a rate cut. So 5 members voted for a rate cut, 4 members voted for holding interest rates. So in this case, we expect a majority of the 9 members of the MPC to be voting for holding interest rates steady. So for the ECB, it's the same thing. We expect interest rates to remain at 2.15%. So more volatility will be expected after the speeches. So after the UK data comes up at 3 p.m., the speech will start at 3:30 from the Bank of England Governor Bailey. So this is where we expect more volatility to come from for the GBP pairs as well as for the UK 100 benchmark index. So for the ECB, we expect more volatility at 4:15 p.m. and the highest volatility during the ECB press conference. That is 4:45 p.m. And all these press conferences are usually available live on YouTube. So you can watch the speech directly from the ECB's page and from the Bank of England's page. Then from there, whenever there is audience questions, the responses from the central bank governors can cause a lot of volatility. So be careful. High or increased volatility means increased risk and at the same time increased opportunity. But then if you don't know what you're doing, you can lose out of money in the markets. If you know what you're doing, you can also make a lot of money in the markets. So it's upon you to decide whether to engage or whether to stay away. So other than that, we'll be getting a speech from Bank of Canada Governor Macklem at 8:25 p.m. And New Zealand will be entering a bank holiday at midnight, basically observing the Waitangi Day. Oh, sorry, Waitangi Day. Don't know what it means. So fast forward, we'll be getting another speech from the South Bank of Australia Governor Bullock. Remember, they just hiked interest rates. So one more speech on Friday at 1:30 a.m. Could present more trading opportunities and more volatility for Australian dollar pairs. Trump will be speaking at 3 a.m. So if you have some open trades involved in the US dollar, gold, silver, US equity indices, and you know there's a 3 a.m. speech from Trump, you better have the right protections available for your trades, or be up at 3 a.m. to follow through with the speech because it may materially impact your running trades. So at the same time, it may open up trading opportunities. So it will be very interesting to see what he has to say. So this will be happening at 3 a.m. on Friday. So that is before tomorrow's market snapshot. So he'll be speaking at the White House in Washington, D.C. He speaks frequently on a broad range of subjects. Only speeches that might have direct market impact are listed on the calendar. So we'll be watching keenly to see what he has to say. Then for the rest of the events on the economic calendar, they will be discussed by Prudence as we get into the next market snapshot tomorrow at 11 a.m. So for those who are new, you should know that these sessions happen daily from Monday to Friday at 11 a.m. So make sure that you are subscribed to the channel, set notifications on, so whenever we go live, you'll get an update and you'll be able to join immediately. So on the stock market side, it wasn't the best of sights yesterday. And as you can already see, I'm looking at this is the FinViz map, and the performance was very bad, especially for big tech. So notice Tesla was down 3.78, Amazon 2.36, Google 2%, Meta 3.28, Nvidia 3.41, Broadcom 3.83%. Palantir was down 11%. I think this was one of the biggest highlights. Oracle 5.17%. It was only Microsoft and Apple that had gains in the big tech sector. And by big tech, I mean some of the magnificent 8 companies. So what we are seeing here was a bet that sought to basically reduce exposure to companies that have put too much money into AI. And as a result, we saw big drops happening there. Also in semiconductor equipment and materials, it was a red day with losses ranging from 3% to 8%. You look at the semiconductor industry, from Nvidia to Broadcom to Micron, losses would extend all the way to 17% for companies such as AMD, whereas the ones that managed slight gains, like Skyworks, you can see up 5.49%. So clearly, the rest of the market was mostly in the green, but due to the weight of these indices, they kept pushing the indices lower, and that led to a negative day. Again, if you look at the Nasdaq, wasn't also doing very well. So if you consider that each square represents the weight of the stock, or rectangle represents the weight of the stock in the index, so out of the 100 companies, you can see that if you just count, let's say six stocks that were in the negative, you already have more than 50% of the space. And I'm talking about Meta, Google, Nvidia, Broadcom, Amazon, and Tesla. So these companies already occupy so much space. They were down quite a significant amount. You add Palantir there. You add ASML Holdings, Alarm Research Group, Applied Materials, and KLA Corp. Then you can see that this explains why the entire index was down yesterday. So mostly out of deleveraging away from companies that have been putting too much money into AI. So as a result, we are seeing some form of rotation where investors are now considering other stocks that are similarly cheaper. And then you tend to see some of these green opportunities in these other stocks. So right now, it might make more sense to be looking in that direction where you focus more on the stocks that are currently undervalued rather than just going for the popular tickers, especially on the news. So you look at the Dow Jones, most of the stocks were largely in the green. The only companies out of the 30 companies in the Dow Jones that were negative were Nvidia, Amazon, United Health. There was Cisco, IBM, Caterpillar, and Goldman Sachs Group. The rest of the stocks were basically in the green. So that's why the Dow Jones was able to hit a new high yesterday. So looking at other key highlights, Asian stocks fall on tech route. Clearly, as investors were deleveraging from tech yesterday, they're also doing so in Asia. So Europe stocks set for lower open. Indonesian Q4 GDP growth highest in over 3 years. Silver plunges amid renewed selling pressure, dropped by about 18% early this morning. Dollar strengthens on hawkish Fed signals. Australia trade surplus slightly above estimates, and oil slides as US-Iran talks ease supply fears. So there was a positive talks between US and Iran, and those positive talks removed a premium where a lot of investors were adding a premium due to fears that supply could be impacted. So other than that, looking at the other highlights, Euro USD softens below 1.18 ahead of ECB rate decision. So while the dollar is very strong this morning, it's gaining against the euro and also gaining against the pound. So holding interest rates steady was supposed to be the other alternative compared to cutting interest rates. So this is supposed to be positive for the currency. But then, as we have seen, especially over the last 1 year, whenever you have such a decision coming up, the markets often price in this information before the actual date, so that when the announcement is actually made, you see the opposite happening. So instead of seeing a strength in the pound, it's likely that you will be seeing a weakness in the pound after the announcement that they have decided to, let's say, hold the interest rate steady. So a similar outcome is expected in the Euro USD pair, where you expect the euro to be losing to the dollar after it has been gaining weeks before the ECB rate decision. And of course, the market had already priced in the possibility that the ECB will not be cutting rates today. So, of course, we'll be expecting that the market will be asking the ECB chair, Christine Lagarde, about the euro. This is from ing.com. Japanese yen continues to lose ground against the USD. USD JPY climbs above 157. This is something we had projected on Tuesday. USD INR, Indian rupee, declines as Indian rupee gains on US India deal. Bank of England said to hold interest rate steady as markets seek clues on further easing. Gold sticks to negative buyers on farmer USD, holds comfortably above the low of 4,900. So these are just some highlights in the market as of this morning, and trying to see if there's anyone I missed. Of course, gold prices fall, silver plummets 16% as dollar firms ahead of central bank meetings. So gold prices reversed early gains and fell in Asian trade on Thursday, while silver plummeted in a sharp reversal of a short-lived rebound seen this week. A rout in metal markets largely resumed after a brief respite this week. A strength in the dollar ahead of key central bank meetings in Europe weighed on the sector. So silver was by far the worst performer in metals, with spot silver tumbling as much as 16% to $73.55 per ounce in Asian trade. Silver futures for March tumbled by a similar margin, hitting an intraday low of $73.3 per ounce. So losses were seen starting in Chinese markets, with a rout in Shanghai silver futures spilling over into spot trade. Wednesday's losses also saw silver largely wipe out a recent rebound and come back in sight of lows hit last week. Even as prices of precious metals are now less elevated following the correction sensitivity to the USD, yield repricing and uncertainty around Fed policy under new leadership remains high. While positioning has likely reset to some extent, confidence may not have fully restored, pointing to a potential period of choppier two-way trading. Christian Wong, FX strategist at OCBC, said in a mailed comment. Still, Wong noted that the fundamentals behind silver recent gains still remained in play, and that the metal was likely to benefit from its status as a precious and industrial metal. Broader metal prices also largely retreated. Spot platinum slid 6.8%. Among industrial metals benchmark, copper futures on the London Metal Exchange fell 0.8%. So dollar strength pressures metal prices as BOE and ECB meetings room, and I think we already mentioned this. So trying to see if there's anything else I've missed before we jump straight into uh, some technical analysis. So from Reuters, investors hunt for bargains after software Armageddon. So this seems to be the key highlight of the morning. So the software Armageddon is the big sell-off we are seeing in tech. So Wall Street's software Armageddon has been snowballing. Now investors are debating whether it's time to warm up to the beaten down stocks. The fallout for the software industry, which includes a handful of signature stocks on the recent bull market, reflects growing anxiety over potential disruption caused by artificial intelligence as investors increasingly divide the sector into perceived winners and losers. The volatility also comes as investors shed tech holdings for other market areas that have mostly lagged in recent years, while investors await quarterly updates during the heart of corporate earnings season that could further shake asset prices. The sell-off, which arguably started last quarter, is a manifestation of an awakening to the disruptive power of AI, said James Obin, CIO at Ocean Park Asset Management. Perhaps this is an overreaction, but the threat is real and valuations must account for that. The SP 500 Software and Services Index has tumbled 13% in just the past week, shedding more than 800 billion in market capitalization in that time, driven by sharp falls in companies including Intuit, ServiceNow, and Oracle. Relative to the overall SP 500, the software group put up its worst 3-month performance as of Tuesday since May 2002 during the fallout from the dot-com bubble bursting, according to Evercore ISI equity strategists. So this is interesting. I want to check something from the futures side. Or from the SP 500. Yeah, so this basically the year-to-date performance of the SP 500 stocks, but then classified based on the sectors. So basic materials seems to be the best performer since the year started with a 16.62% gain. Energy, on the other hand, is up 15.74%, consumer defensive 11.9%, industrials 9.92%. So real estate is slightly up 3.08%, utilities 2.53%, healthcare 1.14%, financials 0.84%, communication services 0.55%, and consumer cyclical 0.32%. So the only sector in the US stock market that is losing money is the tech sector, which is down 4.36%. And this is very telling. It means that a lot of investors are rotating away from tech and going into other sectors with a key focus on basic materials, energy, consumer defensive, and industrials. So that explains why we are seeing the Dow Jones hit new all-time highs, whereas the Nasdaq is experiencing more and more of a sell-off. So those are the key highlights as of this morning. So I believe now we can jump straight into some technical analysis and try to understand where the markets might be headed next. So for those who are new, these sessions happen every day, Monday to Friday at exactly 11 a.m. The sessions are recorded, which means that if you miss a session, let's say you're busy at 11 and you come back at 12, you can find the recording on FXPesa's YouTube. You can find it on my profile on X, Rufus KE, FXPesa's profiles on Facebook, as well as on X. So make sure to check them out and don't ever miss a session. So clearly, there's a lot more happening in the markets today. So I'll be starting with what happened this morning with silver. So last week, we had this big sell-off where in a span of 2 days, we saw silver dropping by 41.47%. So this was quite a crash in the price of silver, which was up around 149% last year. So on the backdrop of this, we had the market making a rally on Monday. After the sharp drop on Monday early morning, we had some recovery. Tuesday, the price kept going up. So I remember when we were doing an analysis, we were targeting this price action area here. Wednesday, we kept going up, but we didn't get to our target here. And the target was informed by a prior high here and a prior low here. So what we ended up seeing happening was that yesterday in the evening, after we got into the New York session, there was a drop in silver prices and then an attempt to move higher. But then today, at the Sydney Open, we had a sharp drop in the price of silver. Well, it looks like it's nothing. This was equivalent to 18.84% drop. So this is a moment of extreme extreme volatility for the gray metal. And since then, all we have been seeing is the market now attempting to make a recovery. So it's really pushing higher and higher. And if you look at the average movement around here, it seems like most candlesticks can be fit along these two lines, with the exemption of about 3 here. So here we are seeing consistent recovery in silver prices. So if you go to the 15 minutes chart, then you'd notice that there's a key level here that was acting as a support and now could be turned resistance. So for the next big bullish move, we would be seeing the market retesting $82.525 per ounce of silver. So on the gold side, there was a sharp drop as of this morning. Go to the 5 minutes chart. So if you look at the swing high and then a drop all the way down, 4.67%. This was the drop in gold. But since then, we have been seeing more of an attempt towards recovery. So clearly here, gold has been consistently pushing for further upside. So this basically implies that if you're looking to participate in the gold market, you wait for the pullbacks and buy on the lows. So this particular trend line could be the defining area for entries. So it's the same thing for silver. Well, you don't want to be buying the absolute highs. So if you get towards the lower trend line, then the idea is to be looking for buys in that as the market looks to recover from the big panic selling that happened early this morning. So as for oil prices, you'd notice that we have been on a very strong bullish trajectory. So ever since we bottomed here, and this was in the month of December last year, we bottomed at $58.59 per barrel of oil, and then we gained or rallied by 20%, and now we are still up 16.59%. So it basically shows the strength that we are seeing in oil. So a lot of disruptions happening in the markets, but then the price keeps going up. So even after the news yesterday showing a big draw from the US oil stocks, what we eventually got as the price action reaction was a sharp drop in oil. But now you can see we are resuming bullish momentum. Of course, we should be looking to benefit as the market looks to test yesterday's high. So potential bounce and extension of this rally to 69.595 as we approach the $70 mark for crude oil prices. And this is for Brent oil. So on US equity side, big sell-off continued yesterday. So today we are looking at a potential recovery. But from what we are seeing here, especially on the daily, this seems to be a sharp drop, and market will eventually have to find some kind of support. So yesterday's low seems to be very interesting, but then since then, the bullish momentum except the immediate reversal here doesn't seem to be extending. It seems like a market that is really stalling. So if you look at this previous low here and how the market has reacted with it, so after breaking the prior low and moving back up, the market seems to be finding some form of resistance here, which implies that the bounce is not very strong. So you go back to the H1 chart. This was the prior low. The market gets back to it, doesn't break it twice, and still remains around or within that range. which implies that we could be seeing further bearish momentum on the Nasdaq index. So this is already evident from what we have seen in the performance of individual stocks in the Nasdaq index, where the big tech sector is seeing a lot of a sell-off as investors rotate to much more stable sectors. So the Dow Jones, from a daily time frame perspective, is how it looks like. It's a market that is flirting consistently with all-time highs. So this is the all-time high. Notice the last 2 days we have been flirting with it, attempting to break but not breaking. So you will go to the 4-hour time frame, and this is this week's performance. So an attempt here, an attempt here, an attempt here, but none of them seems to be breaking. But the more we attempt, the more the likelihood that we are going to break that resistance. So now looking at this and the price action as of yesterday and today, you can see there is quite some play here between this area here and I would say this area here. And if this was the range of yesterday, that is the difference between the highest and lowest price yesterday, then today we are trading within that range. We are not breaking high or low. So I would expect the Nasdaq to remain the Dow Jones to remain within that range. And if there's a break towards the upside, then that would inform more bullish trades. If there's a break towards the lower side, then bearish trades. Then you look at the SP 500. This is the 4-hour time frame. This is the daily time frame. Clearly, very strong bullish momentum with value areas being constantly found along this particular line here. So anything close along those lines, that line could be taken as a value area. So whenever you see such a market and such a pullback, then the idea is to be looking for bullish positions along the direction of the trend when the market retests the lower trend line. So on the 4-hour time frame, if you zoom out, you notice that resistance is becoming harder to crack. So this week we haven't broken last week's high, and last week's high only broke the previous 2 weeks high only slightly. We show some weakness in the bullish trend because in a strong bullish trend, you tend to see higher highs and higher lows, but now even the lows are becoming quite questionable. For instance, if you look at last week's low, it was basically here. You also look at, I believe this was Monday's low, Wednesday's low. They are basically at the same level with longer candlesticks on the lower side, which implies that the support is more sideways and the resistance is also much more sideways rather than trending. And now we just completed a swing down and we could be looking at a swing up. So it's more of a market that is ranging, moving sideways. So potentially we could be seeing something like this in play. On the UK 100 index, I managed to hit a new all-time high yesterday. Then we had the pullback in the New York session. So today the pullback continues. So we are seeing the market continue to pursue even lower prices, which is much healthy. You don't want to be buying at the very top, at the very tip. You want to find some form of pullback, and then you enter at a much lower price. So it already played out here. After hitting a high, we got a pullback, and then from there, the market made an extension to the strong rally, hitting a newer all-time high. So today, we're experiencing something similar. So we'll be watching closely for signs of bullish entry. And then we don't know exactly where it will be bouncing from. So it's a kind of watch and see, but the idea is to continue trading high. So as for the Nikkei 225 index, from the daily time frame, we already hit a new all-time high yesterday. Today, there was a very strong pullback. So notice after hitting this new all-time high here, there was a pullback, and now you can see the market bouncing pretty well today, meaning that we can already start crafting some lines along this area here. And the idea here is that once the market bounces strongly, then you go for a newer high. So on the currency side, we have USD JPY. We projected that the momentum would continue this way on Tuesday. So it has continued, and not without some small pullbacks. But the idea is that the dollar continues to strengthen against the yen and recover $158.132 per yen. yens per dollar. So on the other hand, you look at the dollar Swiss franc. We projected that you'd see the market testing this area here, 0.78390. But then there was a sharp drop on Tuesday. So Wednesday we attempted to collect and recover some of the losses we saw here on Tuesday. Today we have also attempted the same, but then the market seems to be a bit too slow. So clearly, I would say this is a market that is more of a consolidation or a slow kind of recovery, meaning that nothing much is happening here. So the idea is that we continue trading within that channel. So for instance, now we should be looking at a bounce towards the upper trend line, then wait for more momentum. So Euro USD on the other hand, this is the 4-hour time frame. So after the strong 2-week rally, last week towards the end, Euro started giving back some of the gains. Then this week, but then we started finding some form of support here. So you look at the H1 time frame. This is the daily. You notice we had a very sharp rise and then pull back. So you look at the 15 minutes time frame and you zoom out a bit. Then you notice that Tuesday was bullish, Wednesday was bearish, and today seems to be bullish, which implies that we are trading in some form of range. And by range, I mean sideways momentum market. If this was our high and this was our low, then most of the candlesticks within the last 2 days would fall squarely within that. And right now, we just bounced from the lower trend line and we could be headed here, though we have to be wary of what the ECB might say in the afternoon. So the same case applies to the pound after a very strong rally over the last couple of weeks. Just a sec. So for time frame, strong 2-week rally towards the end of last week, a sharp drop. This week, an attempt to move higher followed by a sharp drop. And if the pound was to continue weakening, then this previous resistance, now turned support, could be very important for us. So here we are looking at a potential extension of the drop. So here, this has been the path. And on the lower side, you have to fit all these candlesticks in one line or between 2 lines. Then they would most likely fit along these 2 lines. And now here, the idea is that the market keeps falling. And if it keeps falling, then as I mentioned, one previous area that was resistance in the back is now potentially the support for this momentum. So if we are trading this market towards 3 p.m., when we expect the Bank of England to make the interest rate decision, then potentially a very short-term drop to 1.35675. So New Zealand USD, the currency king of the currencies as of the beginning of the year, is basically moving in this particular channel, just completed the movement downwards. Remember we talked about this on Tuesday, market testing this particular trend line, either breaking up or down. We said it's a wait and see. So once the price got here, dropped, attempted to break again and eventually dropped yesterday. And today we are looking at a potential now rally towards the upper trend line. So dollar trading against the Canadian dollar, we managed to break above this particular trend line. But then after breaking above this trend line, the market was really slow on Tuesday. Wednesday attempted to push higher. And today finally have that push, which implies that the US dollar could gain against the Canadian dollar and reach 1.37382 price level. So AUDUSD, we projected more bullish momentum here on Tuesday. So some weaknesses were seen yesterday. Even today, some further weakness. So the key level to be observing is 0.69 for the same idea, 0.69431 for the same idea that we had here on Tuesday. Market retesting this particular trend line and then bouncing from there and pushing even higher. And that leaves us with Bitcoin. We haven't discussed Bitcoin. Bitcoin is officially clearly in bear market territory. So from this high, that we saw in the month of October, the 5th last year, when Bitcoin was at $126,000. So far, it has dropped by about 44.31%. Bit of some recovery, so 43.77% from the recent high. So that's way beyond bear market territory. And today it went down below $70,000 for the first time since what? Since, try and zoom out. So this is for the first time since November 2024. So that's more like in a year and 2 months. So in a year and 2 months, Bitcoin hasn't traded this low, and now we are seeing that happening. So this basically tells us more bearish momentum and panic could be experienced in Bitcoin's prices. So as a result, if you've been looking to buy, then you start shopping from these levels. And the further down it goes, you basically let DCA. And for those of you who already bought or at 126K, it's a long wait, but hopefully we'll see a strong recovery from this bearish momentum. It's not the first time that we have seen Bitcoin in a bear market. So bear markets tend to present some of the best opportunities to buy Bitcoin at a cheaper price. So this could be it. Then we look at European equity indices, beginning with the DAX, the German stock market index. So clearly, yesterday was bearish. The second half of Tuesday's trading was also bearish. So despite expecting a very strong rally to get to a new all-time high, what we got is a rally that stopped at the previous week's high. So the previous week's high was our resistance, and that being the real resistance, after we got there, there was a sharp drop, and now we are looking at the support. So the support for the DAX seems to be pretty close by. So we have several key levels. We have this, which served as the low on the week around the 21st of January. Then on the last week, here we are looking at, sorry, this week, the low is 24,203, and this particular low was 24,342, and it seems like the market is gunning for that low. So having really attempted and pushed to move lower, now faced with a key level support, which was yesterday's low. If we breach here, then definitely we should be looking at a high probability trade that would see the market push below this to 24,342. So EU50 just flipped its candlestick. Try and clean the chart here. So from the 4-hour time frame, you can see that we are in this form of reality where the market is moving sideways for 1, 2, 3, 4 weeks, and now this being the 5th. And then from the 1-hour time frame, there's key levels to observe, which was yesterday and Tuesday evening lows. But then if the market happens to breach below them, then we should be looking at other key levels in the market, areas that have served as lows before. And here we are looking at 5,922 price action area, with the potential for extension of bearish momentum further down to the week's low. So French 40 stock market index is also almost flipping its candlesticks after breaking, closing this particular gap here. So remember from last week and the prior week, we had talked about the market eventually closing that gap. So that played out as expected. And now that the gap has been closed, so we are looking at the potential of the market reversing direction here and pushing further back downwards. So if you check closely, you'll notice that there is yet another gap here, and the market could be coming for this particular gap, given that the prior gap has already been closed. And from what we are seeing from smaller time frames, attempt to move higher is met by very strong bearish momentum. So Swiss stock market index also taking a step backwards after hitting the prior high. So notice how we had a new high, and hitting that high, which happened 2 trading sessions ago, sorry, one trading session ago. So here we are seeing a very strong reversal. For those of you who know what an evening star is, then this is perfect. And it happened right around a key level resistance. So immediately after that, you notice that the market is now pushing lower. And of course, the first short-term targets should be somewhere where it's very synonymous with support. So key levels that were previously resistance now turn support, and of course the most recent support, when they coincide, then this becomes our new target, 132,288 price level. So Netherlands stock market index are also quite busy, with a big sell-off and still quite a noisy chart. But overall, it's a sideways market. It's a market that once you see it, you know that this market hasn't been moving up or down. The price action is just flat. And when you know that, the idea is to now participate in that price action by trading on the edges, buying when price is low and selling when price is high, therefore benefiting from the range. So platinum also wasn't spared as of this morning. So if you look at what happened to silver, platinum was also down by about 11.22% before attempting some form of recovery. So some recovery is playing out, but the price of platinum is still very weak. So high grade copper futures also had a big sell-off last week. But then if you look at this morning's route or sell-off, they were down 3%. So clearly with reduced volatility, but then the idea is that the market is still extremely bearish, given what we saw here, where the futures were down 15.55% within a span of 2 to 3 days. And if we continue seeing such kind of activity in the market, then we might consider the end of the bull market that we experienced last year in a majority of precious metals or precious commodities. So that is it from my side. I'll be checking the comment section for any questions that I may have missed. And once we cover that, hopefully everyone will be able to trade from an informed perspective. All right. So what did the Japanese central bank decide on selling their bonds worth billions? So this is an agreement between Trump and the Japanese government that they are willing to work together to support each other in defending the Japanese currency. So the Japanese currency has been quite volatile, and as we have seen on USD JPY, I'll try and open the chart right now. So here is the USD JPY currency on the daily time frame, and as you can see, since April last year, the dollar has just been gaining against the yen. So with very weak yen, their products become very attractive to the world. But then this also affects their local population. So in defending the yen against too much strength from the dollar, that's why they keep doing these sharp drops here. So if you are in the market for the last couple of years, then you know that whenever the yen is too weak, we normally get these manipulations when the yen sells dollars, uses the dollars to buy the yen of the market, which ends up strengthening the yen. So this happened some time back. This was during which month? July 2024. So giving the yen some breathing space. But investors tend to bet against this behavior. So eventually, after they do this, we tend to see the market doing the opposite. So in this case, more investors buying the dollar against the yen and reversing what was done by the Bank of Japan. So good question. Good morning. What's your view on copy trading as diversification option to traders to diversify the investment portfolio? And do you have a copy trading strategy provider account? No, personally, I'm not allowed. So I'll try and figure it out. If you've really tried trading and the skill isn't for you or you don't have the time, you can check out FXPesa's copy trading platform. Just sign up with FXPesa, log into the website, go to copy trading, and then check the top trading accounts and how they are performing, with a key focus on the risk versus the returns they are getting. And then using that information, you will be able to copy other traders. So this reduces the risk of giving someone your money or your trading account. So in this case, you just deposit money the same way you deposit in your live account. But then you copy another person's trade, and of course there will be a profit share. So when the guy or the person trading makes some cash, whether they're using manual or bot, you will be able to benefit as they make money on your account too. So yes, that facility is available. Make sure to check it out. So on the oil price macros, I already mentioned that Trump has an agreement with Iran. So in this case, there's no escalation. So what we are basically seeing is investors removing a premium on the price of oil and oil price dropping. So despite the strong rally that we had seen in oil, there is a good chance that we'll be seeing some normalcy resuming. So while here we have this strong bullish momentum, and the market looking to retest the upper trend line here, the idea overall is that this is our top, this area here. This could be our top, and once we get to $70, then we swing back to below 60. So of course, OPEC will be looking to expand production, so eventually price will be moving back to below 60. Good morning, Dante, Gisharu, Derry, Alfred, Lina Muhonja, Joey Goko. Good question. I do not own FXPesa. I think my title is listed here very clearly. I work as a market analyst with FXPesa. Amen, Theophil. Thank you very much, everyone. Thank you for your time, and I hope to see you on the next session. So remember to register for a trading account using the links provided in the description below. If you're watching this on social media, check out the official FXPesa pages. Then from there, you'll be able to find where to register for a trading account. And if you haven't checked out the latest episode of the British Banter podcast, make sure to check it out. It's available on FXPesa YouTube as well as any other podcast platform. Leave a comment, leave some feedback. If you enjoy the session, then share with other traders. Let's grow and develop a community of traders together. So that is it. Enjoy the rest of your trading day. Thank you, Joy Goko.